as they go, but I'm really excited that you guys are here for tonight's convo. Zach Spainhour is an incredible, heart-centered, creative-minded tax professional. He is the brains and the heart behind Spainhour Tax Prep LLC. And as a fellow Tar Heel, I'm excited to say that Zach comes to us from UNC Chapel Hill, where he has a BA in economics and a minor in entrepreneurship. Zach chose his current career as a financial professional and a tax professional based on his passion for helping people make informed financial decisions. And as we often talk about on Creative Convos here, making those kind of informed financial decisions and moves and preparation is something that doesn't always come naturally to artists, creatives, and makers. We want to put something into the world, not be able to account for it to the IRS, but as we are also creative entrepreneurs, making sure that we have our T's crossed and our I's dotted in that department is really important. One of the things that's truly notable about Zach is that he is an IRS enrolled agent. Long story short, that means he knows his stuff. He knows how the IRS thinks, but he also knows how his clients think, and he can put those two together and hold them in space to help you not only prepare, when you've got to report annually, but more importantly, prepare in advance. And that's actually one thing today. I'm sure you might have thought to yourself, why are we talking about taxes well after April 15th? I've already filed my taxes. Well, the reality is once you're filing, it's a little too late to make the adjustments and the changes and employ various strategies that are going to put you on the right side of those taxes and be advantageous to you as the year goes on. We want you to start now, knowing what Zach knows, and if you have to make some adjustments to what you're doing currently, you have time to do that. So please, as we go, ask questions in the chat. We are going to try to leave ample time at the end for one-on-one Q&A. We'll hit you the questions that you have, big and small, in the order in which you put them in there. I'm going to be sharing some links as we go. And just before I turn this over to Zach, I do want to say one thing. And if you do put your attention to the chat really quickly, the next iteration of our Charlotte Reciprocity Circles is on Saturday, June 14th, from 10 a.m. to 11:30 a.m. We just opened up tickets today, and almost a fourth of them are gone. So this is our social capital exchange program, where excuse me, I gotta let some people into from the waiting room. Our social capital exchange program, where you get a chance to sit in a circle with other business professionals, and I can tell you, as of this morning, we have a number of professionals from Wells Fargo that have signed up to share their experience. And you sit in a circle, you get an opportunity to ask for what you need, something that is in your way or a challenge that you're having, and address it. And then share the social capital connections, intelligence, resources, and insights that you have. Everyone in the circle gets a chance to both lead and follow, ask and give. That's the nature of reciprocity. Is there is no one in those circles that has more than anyone else, but collectively, there are a lot of answers in that room. So please do click that link, sign up. The event is completely free. And this time on the 14th, we're going to be at the former Plaza Presbyterian Church on the Plaza. That building has been acquired, or it's in the process of being acquired by Arts Plus, and is going to be turned into an incredible arts and creativity studio over the next couple of years. And we are going to be the first public event inside the facility as it's being transformed. So I want to have you there. With that said, I've taken up enough of your time. I want you to drink in all of Zach's knowledge, and I'm happy to turn it over to Zach Spainhour for Solopreneur 101, business tax tips and tricks. Zach, it's all yours, my friend.
Tim, thank you so much for the warm introduction. Hello, everybody. Happy Thursday to you. Thank you so much for joining us for the riveting topic that is taxes in business at 6 o'clock on a Thursday night. I know that those that are here tonight are probably eager to learn. So, as exciting as taxes are, I'm going to be respectful of your time this evening. I could probably ramble about this stuff for 5 hours, but unless you're having trouble sleeping, I'm going to spare you from doing so. So, without further ado, let's get right into it. So, I noticed we had just a couple people trickle in right after Tim's, kind introduction to me, but just real quick, my name's Zach Spainhour. I'm an IRS enrolled agent. It's similar to CPA. If you haven't heard about it, it's just a credential issued directly by the IRS. I'm founder and owner of Spainhour Tax Prep LLC. That's all the boring stuff. More fun stuff is, and this is kind of, what attracts me to the Charlotte's creative community. When I'm not doing all these boring things with taxes and numbers, I'm building with Legos. I'm producing music. I'm engineering music. It's all for fun. So I am a creative first, and by day, I am a tax professional. So just a little bit of background about me. So before we get started, just a little bit of CYA, a little bit of housekeeping. Of course, this is just for general education only. It is not advice. If you are going to make decisions around a business or a side hustle, please, it doesn't have to be me, but please consult a professional first. This stuff gets complicated and screw ups can be pretty consequential. So with that being said, let's get right to it. So who is this presentation for tonight? I think about a few different categories of people. Generally, I think it's about for creatives who are thinking about starting a business. Maybe you're in the early innings of running your business. Maybe you've been in the game a little bit, and you're just seeking a little bit of guidance. So, and even if you're just a passionate creative with a day job, maybe you're really just starting to think about this stuff, I think you might learn a thing or two tonight. So, first step is you've got that creative passion, right? And now the wheels are starting to turn. You've made a decision. I want to turn this into something, whether it's, a kind of side to your 9 to 5 that you pay the bills with, whether, you really just want to go for it and make it the main thing, somewhere in between. But as creatives, I, I have a little bit of the left and right brain that front, but I know that as a lot of creatives, they struggle with this part of it, the business structure, the tax structure of it, because it's just a completely different world, right? So, you've got your one thing that you're really talented at, you're really creative with, and you don't know a lot about this part of it. So the question now becomes, now what? Once you've made that decision that you really want to try to turn it into something. So first things first, the way I think about it, and some of this is going to seem basic, but I think you'll at least learn a couple of things. But first things first is really just deciding on your business structure. It's just really important to pick the right one out of the gate. And the right answer here is just going to depend on your business, your objectives, your needs. So generally for solopreneurs, which I think it probably describes a lot of people on this call in this community, I know some people run larger scale enterprises, but really that's kind of the lens of who I'm thinking about here. There's two common approaches, I think, at first. So I'm just going to kind of briefly overview what are they, what are some of the benefits, what are some of the drawbacks, and just, kind of lay that out for you. So first things first is probably the simplest one, which is a sole proprietorship. It's kind of the name, right? You can operate under any name with a sole proprietorship. It's you are the business. So if it was me, I could just call it Zach Spainhour and we could call it a day. So the plus is that it's a simple way to get started. There's really no substantial tax or legal compliance or operating costs to just get started on this route, except for if there's anything unique to your particular product or service. And it can be changed or updated as your business needs evolves over time. So just because you start out as a sole proprietor doesn't mean you're locked in to that way of doing business for the rest of your time. But it's a good, easy, simple way to get started, very common. The cons is, of course, you may outgrow it as your business evolves over the course of time. And another important one is there is no legal or tax separation between you and your business. They are one and the same. So that's kind of a double-edged sword, right? It's simple, but also, heaven forbid, you ever run into any kind of legal trouble within the realm of your business. Well, you are your business, so there's no separation there. So that brings us as a good segue to, well, what are some other options? And the other, popular one that I think about is limited liability companies, LLCs. So there's a lot of buzz about LLCs on social media, right? You pull up TikTok, you pull up Reels, you will hear people saying like, "Oh, you can do X, Y, and Z with an LLC." It's like the Swiss Army knife of starting a business. And while LLCs can be a great tool, they are versatile. It really just depends. In my opinion, once you really like peel back the layers of what an LLC is, it's not as fun or exciting as some influencer on social media might lead you to believe. But it does have its use case. So LLCs really it's kind of in the name, limited liability. It does provide some legal distinction between you and your business. And really, if someone were to sue your company, it can help provide some degree of protection between your business and your personal assets. And of course, there are exceptions to that. It's kind of a blanket statement, but big picture, that's one of the big benefits of an LLC. It can also it can accommodate multiple owners. So if it's you and a couple of friends that are looking at starting some kind of business endeavor together, an LLC might be a little more fine-tuned to your needs versus just kind of you all doing the sole proprietor route. So there's also that perception with an LLC. It sounds silly, but there is something to be said about the social proof that comes with having those letters LLC behind your business. It's kind of a confidence booster for you. It kind of legitimizes whatever it is you're pursuing, and to others, oftentimes they have that same perception too. That shouldn't be the only reason you form an LLC, right? It's just, in my opinion, kind of an auxiliary benefit. Some cons, or not necessarily cons, just more so things to think about before you jump out the gate and you say, I'm going to go make an LLC right now. You have to file your LLC directly with the state yourself. So you've got to fill out the paperwork to create this entity, or you need to work with a company that will help you with this process, or a professional, like a tax professional or a lawyer. So unless you feel comfortable approaching it head on, you may need to involve a third party just to get it started. There's things like operating agreements, depending on what state you're operating in. I'm assuming a lot of you are local to the Charlotte area, but depending on what state you're operating in, there can be some ongoing legal and tax compliance rules and regulations you need to be aware of. So not only might you need some help up front getting started there, but you might need a little help on an ongoing basis too. But for a lot of people, if you're just a single member LLC, depending on the state you're in, it's not all that complicated. So don't let that scare you from at least looking into it. It's just something to be aware of, right? It has a little more, bells and whistles than just being a good old fashioned sole proprietor, but there does come some complexity with that. Another just thing to be aware of about LLCs, and this is kind of, I talked about what influence will lead you to believe about an LLC. An LLC at its core is what is called a pass-through entity. What that means, that's just fancy language for, while there might be some legal separation, any revenue or expenses earned by your LLC, unless you have, I'm not going to go in that for the purpose of this presentation, unless you have something more complex set within your LLC, but at its core, a simple LLC, any revenue expenses flow through directly to your own tax return. So if you just have a simple LLC, there's not really a tax benefit versus just being a sole proprietor. That net profit you show within your business, those expenses you deduct, they're all going to flow through the same to your individual tax return. So, and as your business needs evolve, there are ways around this, and maybe we'll touch on that towards the end of it. I don't want to go down a rabbit hole with it, but at its core, not really any major tax benefits you should be aware of. So let's say you've made your decision. You have gone the sole proprietor route, you've gone LLC, or maybe your businesses are different. You chose something else, and now you're running your business on an ongoing basis. I'm certainly not here to tell you how to do that, because again, you're the expert in whatever you're pursuing here. But I do want to provide you some guidance around just what I would call good business hygiene. Staying organized, staying compliant, not fun stuff. But if you can get this stuff right from the get-go, or you realize, oh crap, I'm not doing some of these things, and you can kind of course correct to do some of these things on an ongoing basis, it's going to do you nothing but favors in the long term. So what should you be doing? You've probably heard this one before. I mean, it's probably low hanging fruit, but I feel like a lot of people know this and they don't follow it. Keep a separate bank account. I don't care what business entity you use. You want a separate bank account. And if you have a credit card, you want that in your company's name, or you at least want a separate credit or debit card aside from your personal business account, or excuse me, your personal checking account, your personal credit card, debit card. And there's a slew of reasons why that is so important. And just as a side note, if you're opening what's specifically a business checking account, you may need what's called an employer identification number. Again, sounds fancy, but truth be told, you can go to the IRS's website. It takes 5 minutes. You can apply for one for free on there. In my opinion, not something worth paying somebody to do for you. You will find people out there that charge you to do this. And within 5 minutes, you can have an employer identification number. And think of it it's kind of like a social security number, but it's for your business. And it can sometimes, especially early on, even if you're just a simple sole proprietor, it might not be a bad idea to get one because some things within this realm require one. So anyway, back to business bank account. Why is it so important? Number one, it's about protecting your personal assets. So we're going back to that protection and liability side. Again, heaven forbid something litigious ever comes up with your business. You want to make sure that clearly your revenue, your expenses, what are considered assets of your business versus your personal assets are separated. Because if they're not, it can get murky really quick, and you don't want to go down that route. The other most important part is just simply tracking your revenue and expenses. Come tax time, I promise you, you do not want to be scrolling through your personal bank statements, your personal credit cards to figure out, oh, was that a meal I did with the client? Or, oh, was this software subscription? Was this something for me personally, or is this for the business? I don't really remember. Worst case scenario, you're missing out on valuable tax deductions. Best case scenario, you're missing out on valuable tax deductions. Worst case scenario, you're accidentally claiming things that are personal expenses on your tax return, and you do not want to do that. Trust me. So just save yourself so much time and headache. You can probably do it in half an hour one day once you've kind of decided which route you're doing, or if you're not already doing this, please use a separate bank account. You will thank yourself later. And that kind of flows into a best practice number 2 here. Keep good records. The good news about working for yourself is there is a slew of expenses you can deduct from your profit to bring down what income is ultimately taxable. But in order to do this, you have to keep good records. And believe it or not, bank or credit card statements are not enough. You need to be keeping invoices and records, receipts, everything. You have to have proof of purchases that were made for your business. And really, why is this a good idea? Again, come tax time, you don't want to have the hassle of organizing and categorizing your business expenses you've incurred throughout the year. It's easy to forget what was and wasn't a business expense. But more pressingly, if you get audited by the IRS and they challenge any of the deductions you claim, you need thorough documentation of these expenses to support whatever deduction you claimed on your tax return. And even if you keep documentation, going back to that importance of a separate bank account, they're more inclined to say, we don't believe you if your documentation is riddled with all your personal business expenses. And the IRS not believing you is not something you want. Because if it's from a prior year tax return, all of a sudden we're talking about things like back taxes, interest and penalties, and worst case scenario, legal trouble. So don't play with the IRS. Seriously, I don't work for them. I just happen to have a credential issued by them. But what I can tell you is I don't care how unlikely you think it is that you will be audited. It's just not something worth risking. So that's a big theme of some of the wisdom I'm sharing with you this evening. And back to that point of just keeping it all organized and categorized, you really get bonus points too if from the get-go you are using something like QuickBooks to categorize these expenses as you go to document them. Like, okay, I had dinner with a client and I want to make sure I remember this expense. Well, keep that receipt, take a picture, and you just upload into something like QuickBooks, and it makes a lot of that so much easier. And even if you don't want to mess with QuickBooks, you're like, well, I'm not an accountant. Just keep some kind of record of it. Even if it's just if you don't have a lot of expenses, you got a pretty simple situation, just an Excel spreadsheet can go a long way. And speaking of the IRS, do not forget taxes. If you're new to working for yourself, you might be in for a shock come tax time. Why is that? Well, there's this sneaky thing called the self-employment tax that can really creep up on you if you fail to plan. So a lot of you, if you're transitioning from a W-2 9 to 5 type day job over to something creative where you're working for yourself, your W-2 job, your employer was doing you a favor on a few fronts. So there's something there's your federal taxes are composed of two components. It's your marginal income tax brackets, 10, 12, 22, 24%. That's just federal income taxes we all have to pay. But there's also another component, which is called FICA taxes. It's 15.3% of our pay. And that's what funds social programs like Social Security and Medicare. So being your own boss is a double-edged sword, right? Because the good news is you're your own boss. You've got all the control in the world. The bad news is you're your own boss, and the IRS expects you to pay that full 15.3% in FICA taxes, which, by the way, until this point, if you're switching from a day job, your employer was paying half of that for you. So, whether you agree or disagree with it or not, please don't shoot the messenger. When you are self-employed, you are paying taxes at a higher rate because you are both the employer and the employee. And again, in this process, don't forget about federal income tax and state income tax if applicable. If you're North Carolina, that's a flat 4.75% everything you make. It's easy to forget about, but it does exist and it will come to bite you come tax time if you are making some profit in your endeavor and you don't pay some kind of estimated payments on your state income tax. So that brings me to my next point, which is, if you're at a point where after expenses, you're starting to actually show some net profit with your business, it's really important. You don't have to put a lot of time or energy in this, but it's really important that at least on a quarterly basis, you're checking in on kind of your year-to-date profit and where that's going to kind of land you from a tax liability perspective, because it's at a higher rate. Because again, coming over from a day job, your employer was withholding that income on your behalf. Well, they're no longer doing that. So you're on the hook. And if you aren't paying your quarterly income taxes throughout the year, you're either going to go to file your taxes in April. You're going to go like, oh crap, I owe a lot of money in taxes because I haven't been set aside a portion of my profits along the way. And even then, you might owe what's called an underpayment penalty because the IRS expects you to be making payments throughout the year as you are earning your income. So don't get behind on this. It's less important if you're in the early stages and maybe you've just incurred expenses, but you aren't showing a net profit from a revenue perspective yet. But it can sneak up on you. And I've worked with clients that by no means run a large scale business, but they don't think about this. They just they reach out to me come tax time. They say, hey Zach, my wife runs a business on the side doing X, Y, and Z. And we do some calculations, and come tax time, it's like, yeah, well, you owe $5,000, $10,000, $15,000 in taxes, and I don't like being the bearer of that news. So going back to what Tim said in the beginning, taxes can be proactive or reactive. It can either be I just put in all my stuff around April, and I just pray I don't owe a lot of money, or it's something you can proactively check in on throughout the year. And as you work for yourself, that just becomes all that much more important. And another thing too, if you're working your day job still and you have the side hustle, for example, don't just make the assumption that your employer is withholding enough taxes from your day job to cover what you make on your side hustle. You may still owe additional liability above and beyond that. So don't just fall into that assumption. If you're showing a net profit, there's probably some kind of tax liability coming with it. So again, in terms of figuring out how much do I pay, there is software out there that can help you determine this. There are professionals that can help you determine this. So this is certainly, if you run a simple SIP business, this is probably something you can DIY if you feel comfortable doing so. But if you don't feel comfortable in any way, shape, or form, I would just strongly recommend working with somebody on this. Again, tax is not something you want to screw with. So moving along here, of course, one of the big benefits of working for yourself, like I mentioned before, is you can make certain tax deductions. You might even be able to claim certain credits against your income. Um, but you might, people joke around on social media like, oh, it's a write-off. They say that about everything. In reality, there is, the IRS is pretty generous in terms of what you can deduct against your self-employment income. But it's got to be, just think about this big picture. If you're thinking, well, can I deduct that? Is it ordinary and necessary to your line of work? It's just, I could give you an example, but there's just so many different things. Think about your particular line of work. If you're thinking about like, I just bought this thing, is this going to be a deduction on my tax return? Well, is it ordinary and necessary to photography or grant writing or whatever your line of work might be? That's just a good common sense thing to start out asking yourself. And that can eliminate a lot of things that could otherwise potentially get you in trouble. So speaking of deductions, I don't want to bore you to death with this screen, but I do think it's helpful for education. So you might see this thing on the right and you're like, oh my gosh, that looks scary. What the heck is that? Back to that business entity decision I was talking about earlier. If you go just kind of the simple LLC or sole proprietor route, there's a form on your tax return where you're going to, sorry about that. There's a form on your tax return where you're going to report all your income and expenses. That's called a Schedule C. It's self-employment, profit or loss. And that all flows through to your personal tax return. If you're thinking back to that previous slide where I said ordinary, necessary, what some of those things might be. This is by no means all-inclusive, because you'll see here on line 27, there's something called other expenses where you have a little wiggle room. Maybe something that is truly ordinary, necessary to your line of work doesn't fit in one of these categories. But broadly speaking, we're talking about things like advertising, expenses you incur with your vehicle, commissions and fees you pay, depreciation if you bought some kind of serious asset. If you have people working for you, what was the cost of benefits you provided to them? If you have some kind of business liability insurance, or you have insurance on a property you use for your business, maybe it could go here. Legal and professional services. If you hire somebody to help you with your taxes or do your bookkeeping, you can probably deduct what you paid them for that service. If you have expenses related to equipment for your office, again, I'm not going to read all of them off to you here. Some of these will probably seem familiar, and plus I don't want to bore you to death, but you can kind of get a sense here. And if you ever just want to like spend more time with this and kind of get an idea of like, when I ultimately have to report this on my taxes, like where does it go? Just go to the IRS's website, look up Schedule C. Again, if you're going sole proprietor route or you're going a single member LLC, if you just look at the Schedule C, kind of study it, it looks scary at first, but when you start to kind of understand it on a more deeper level, you realize it's not all that complicated. It's just simply, here's the gross income I made for the year. Hopefully, again, you're keeping good track of that. And then here are all my expenses for the year. So maybe you made $30,000 for the year in gross sales. You had 10,000 expenses, 20,000 of profit flows through. That's what's subject to that self-employment tax I was talking about earlier. So of course, obviously, the more expenses you have, the better, but we'll get more into that because I definitely have some choice thoughts. Don't just be buying things for your business because you think it saves you money in taxes, because that's a common misconception, and I'm going to show you why shortly. So not everything is on the Schedule C that you can be deducted around your business. If you have some kind of retirement plan set up for yourself, they are reported elsewhere. If you are self-employed and you're paying for your own health insurance, it's reported elsewhere. And then there's something that, again, I could probably give a whole 1 hour talk on this, QBI, Qualified Business Income Deduction. A lot of people will be eligible to this. There are limitations, but essentially it allows you to claim a 20% deduction of your net self-employment profit. And that's a really valuable thing. It actually might be going away in the next couple of years. It's currently will be debated. It's supposed to sunset in 2026. So that might be a temporary opportunity and you might be eligible for it. And if you are, it can certainly help reduce your tax liability a little bit. So moving along, common misconceptions about tax credits and deductions. So again, I made that joke earlier. It's a write-off. You'll hear that You hear that on social media. You hear somebody saying like, oh yeah, I bought a G-Wagon for my business or something, and I just wrote it off and it was basically free. That's not how tax deductions work. And it's crazy how many people still believe this. So think about this. Let's say, I bought a laptop for my business, and I'm in just for simplicity's sake, I'm in an otherwise 20% tax bracket, meaning for every dollar of income I make, I'm paying 20 cents in taxes on it. If I buy a laptop for my business and then I deduct it, that's great if it was something I actually needed. But don't think that $1,000 you spent on a laptop is suddenly free. You are essentially getting, you're getting a laptop on sale. That's how I would phrase it. Whatever tax rate you're paying on your income, that's basically the percent off sale you're getting on something you purchase for your business. So in my case, if I'm paying 20% in taxes on it, I basically just saved $200 I would have otherwise owed in taxes, not the full 1,000. That is just as a common piece of misinformation that I can just buy all this stuff for my business and basically just get my tax liability down to zero. So never do things solely for tax savings. In my opinion, that sounds like a strong statement, but tax savings should probably be like an added benefit of something within your business. It should never be the reason why you're doing it. Now, tax credits are more valuable. I'm not going to get into all the ones out there, but tax credits are what a lot of people think tax deductions are. And that's a dollar for dollar reduction in your total tax liability. So let's say you calculate all your taxes and you still owe $2,000, but you find a tax credit you're eligible for. It's a $2,000 tax credit. That actually dollar for dollar reduces your tax liability. But more often than not, in working for yourself, you're going to more commonly encounter tax deductions, not tax credits. There are some tax credits available to small business owners, self-employed people, but a deduction is going to be, much more common. Next thing, this is a great one, home office. You hear people saying too, like, I work from home or I have a home office, so I can deduct that against my income and call it a day. Maybe. There are some rules around that. And a lot of people, I think, are messing this up and they don't even realize it. So there are, you can basically take a simplified home office deduction, or you can take a deduction based on a percentage of the actual expenses it takes to run your home. So let's say, you have an office in your home, your apartment, your condo, or whatever, and it takes up X percent of your square footage. That's how you kind of calculate what percent of my total housing expense for the year I can deduct against my self-employment profit. The reality, though, is if you use that office space for pretty much anything else, it's not allowed. So if you work a day job and you work from home in that office, but then at night you use it for your side hustle, you can't claim that as a home office deduction because the IRS says it has to be exclusively used for whatever your business you're claiming it from. So I will say there are some people that are eligible for the home office deduction. In my opinion, most people that claim this don't know the rules, or quite frankly, they're lying on their taxes. That area has to be exclusively used for whatever line of work you are claiming it as a deduction against. So be very careful taking the home office deduction if you feel that's applicable, because it also tends to be an IRS audit trigger, because the IRS knows that people like to bend the truth a little bit on that deduction. So be careful if you're going to claim that is what I will leave it at. Mileage. Yes, you can again, the devil's always in the details with this stuff. Within some exceptions, you can claim either expenses used for your vehicle, direct expenses, oil changes, gas, as a deduction for your business if you are truly using your vehicle for that purpose. Or you can just take a standardized rate per mile you drive for your business. But there's a lot of red tape around this deduction, similar to home office. You hear like, I just deduct all my miles and call it a day. Not so fast, or at least if I were you, I would not be risking that. Couple things. One, part of your ability to deduct it depends on if that vehicle is available for other things outside of your line of work. And then part of that too is you can't deduct commuter miles. So I know this sounds crazy, but even if you're self-employed, let's say you rent an office for your business and it's exclusively used for that business, which is great. And you say, okay, well, I drive to and from my apartment to my office 5 days a week. And you're like, wow, well, if I add this up, if I do this Oh, a year? This is a substantial tax deduction. Not so fast, because the IRS says that's not allowed. You can't deduct miles from your home to an office, even if you're self-employed. Now, where it would become deductible is if you drive to your office and then you drive to go meet with clients from there. You go to wherever you might be traveling for business purpose. Then that becomes deductible. But there, again, I'm not going to go through every little stipulation here. There are limitations to be aware of before you try to claim a mileage deduction. So just be aware of that. And ultimately, when it comes to tax breaks, there's no free lunch. If you are getting a break on your taxes, it's because you spent money that you no longer have possession in for the benefit of your business. Or I get a tax deduction for contributing to retirement. Well, great. I can't touch that money till I'm 59 and a half. So you, in some way, shape, or form, what I've just found with most breaks in our tax code is if you are getting some kind of benefit for it on your tax return, you are giving up access to those funds you got a tax break on. So just think about it. There's very few free lunches in our tax code. And again, just going back to it, this is why you shouldn't make decisions in your business solely based on trying to save money in taxes, because there's always some kind of catch with very few exceptions. So wrapping up here, that was the meat and potatoes of what I wanted to cover with you today, but just kind of some bigger picture things around your business. Don't forget to plan for the future. Just like we as individuals should have emergency funds. So heaven forbid we have an unexpected expense, we lose our job, we experience a temporary reduction in our income, we have something to fall back on so we're not racking up credit card debt or just having to make poor financial decisions. Your business should probably have a rainy day fund too. So if invoices or revenues slow down for a period of time, but you've still got expenses with your business, you're not getting in a bind. And that's just part of planning ahead. If, again, I know times are tough, life's expensive, but if you're starting a business, really, you should have some kind of cash cushion, especially if it's your main source of income and you have recurring ongoing expenses with it. And two, just don't forget about retirement. I probably sound like I was demonizing it a moment ago, but just because you're deferring access to money you save for retirement and you may or may not get a tax benefit as a result, doesn't mean it's not worth doing. If you're saving for retirement, which all of us, I think, should strive to do, getting that tax benefit's just a bonus. But again, it's all about intent, right? Your intent is I want to put money away for retirement. The secondary benefit just so happens to be I might have some kind of tax break or tax deduction as a result of doing so. So when you are self-employed or you're a LLC owner, you got a lot of options on this front. You might a SEP IRA, a simple IRA, a solo 401k, maybe just a Roth IRA or traditional IRA. There's a lot of options to this front that can provide you with either immediate tax advantages or deferred tax advantages well into your future. So just, if you can, don't forget about that. And again, just wrap up. It doesn't have to be me. I'm really not here to promote myself. I'm here to just educate because I'm passionate about this stuff and I want to share it with you all. But please, if you don't feel confident around some of these decisions and you're somewhere on the spectrum of pursuing something creative as a business, work with a tax professional. Do yourself a favor. Mistakes in this area are costly and scary. And it's very complicated and nuanced, and it's easy to make mistakes. A lot of people do it. So be smart. Don't be one of those people. It's worth working with a professional on this stuff if you aren't feeling confident. So that wraps us up for today.
That's awesome, man. You give us a lot to think about, and there's some questions that have come into the chat. Everybody, please, we've got time with Zach. We got another 20 minutes, which is exactly what you wanted, so that we could ask some one-on-one questions. And you've got him. You've got a guy who, like you said, he's got the IRS version of a CPA. He knows his stuff. He can answer your questions. And if there's one thing I do want to say before we dive into the questions, Zach, is just to underpin one of the main points that you made about keeping good records. There are many things about tax code and about what's taxable, what's not, what's a write-off, what's not. I mean, Zach just gave us a 20,000-foot view, but ask a professional those questions. Don't go to, Wikipedia and Google are helpful, but a professional is really going to make sure you're on the right path. But one thing you don't have to ask a professional about is keeping those good records. And an example of, even outside of taxes, why that's important is in 2020, the city and the county came to the Arts and Science Council, Charlotte is Creative, the Foundation for the Carolinas, and Hugh House, and said to us, look, we've got $1 million that we want to deploy into, now I'm forgetting, it was a little over $1 million, but into the individual creative community. So we opened up what was called the Invest in Creatives Fund. And that was to help offset the reversals that had happened to people during the COVID-19 outbreak. And the truly painful aspect of that fund, I mean, it was exciting that we got to help nearly 150 grassroots groups and individual creatives at a time that they really needed it. But the painful aspect of it was there was a double-digit number of people that applied. The narrative that they provided said it very clearly that they were somebody who was in line, who fit all the criteria for receiving funding, but they were not able to provide invoices, emails, even for cancellations of jobs, even like tax records. There was no paperwork that they could produce easily to back up the claim that they were making in a narrative form, and those people did not receive those funds, and that was really upsetting. And it wasn't because they were lying or cheating or doing things wrong. It was not because they were unworthy. It was in fact because they had not kept good records, and in many cases didn't even have paper trails with clients. I mean, that's one thing I absolutely want to say, and is if you're getting paid for a job, come to Charlotte is Creative. We will give you a basic memorandum of understanding or agreement so that you've got a record that can back up your relationship with that person and then your payment later of the arrangement you made, what you're doing for them, what they are doing for you, so that if something goes sideways, you can back that up and then provide that client with an invoice and a receipt. That's going to protect you. That's going to protect them. And it's going to make you an excellent provider. I do want to say, Claire, thank you very much for coming and for your kind words. Zach, she says, thanks, Zach and Tim, for putting it on to share some valuable info. I'm sorry you can't stay any longer, Claire, but I'm glad you were here. So please, I can tell you from painful reality that making sure you've got a paper trail on your, not only, the comings and goings, but your expenses and the things that go right or wrong in your business every year it's a lot easier if you do it along the way than if you're trying to do it on April 13th. So we're going to move in, Zach. I'm going to hit you with some questions. Heather Costel, if you would come off mute if you want, but her question is an EIN the same as her sale and use tax identification, or are they two different things, Zach?
Those are two different things. Sale and use tax, I don't deal with, I mostly deal with people who work with service or an offering versus products, and sale and use tax is probably going to be more if you have tangible goods, but they are two separate things.
I would say, Heather, in knowing you do sell tangible things, but then increasingly you're moving into providing services like, hey, I'm going to come out and do this event for you, or I'm going to make this product for you. I think that's something that you should bear in mind. Paul reached out and said, Heather, did you want to ask kind of add some language or some thought around that?
No, I just wanted to say thanks. I thought maybe I had everything in place, and now I realize after this meeting I need to go and do that. So, yeah, thanks. I really appreciate it.
Well, especially everybody, a big round of applause in the chat, because Heather was recently named one of the BPA fellows for the CONVO Festival, the Charlotte International Arts Festival this fall. Heather, you are moving up. It's exciting to see all the incredible things you're getting a chance to do in the Charlotte
Oh,
community.
thank you. That was so nice of you to say. Thanks a lot.
Well, all right, Paul. Now a question from you. Paul said, "Oh, sorry. Actually, Paul, you don't have a question. Well, I know you've got a question later, but you said you recommend a different software. Would you like to chat about that real quickly?"
Oh, yeah, I did have a question afterwards, but the
Yeah,
software
please ask your question too.
yeah, for sure. The software that I use is comparable to QuickBooks. It's called Hurdler. They really gear towards artists. They're great software. I've been using them for the last couple years. Very affordable, easy to track. I guess the questions that I had, Zach, thank you for this, is I guess regarding up until now, I've had W-2 income plus my LLC up until this point, and now this is the first year 100% LLC. And I've always had all of my business expenses go through my LLC, cooked up the hurdler, and everything was itemized so that's all been very organized. This is the first year I've incorporated a business credit card. So I guess my question is, for example, if I needed a new lens or I paid for a significant class, I'll make payments from my business account to the business credit card. And then the payment that comes from the business account, I itemize through Hurdler. My question is, what's the best way? Should I attach my receipt to, let's say I break that payment into 3 payments. I spend $1,000 on the credit card. I break it up over 3 months, 300 and some odd dollars a payment. Do I take the receipt and attach it to each one when I payment? I guess my question is how to best organize that, how to best keep that on.
Yeah, great question. So Hurler, that sounds cool. I haven't heard of that. I have to look into it. QuickBooks isn't the end all be all, just one common example, of course. That being said, in your situation where you're, if I understand you correctly, you've got a business checking account. Of course, you have a business credit card, and comes time to pay that off. You're sweeping over from your business checking account to pay the balance on the business credit card, right?
Correct.
I don't think there's a right or wrong answer there. To give you more something specific, I probably have to know more, but generally I would just say be careful not to double count a payment. So if you buy a $500 lens on your credit card and then you make a payment on there, don't accidentally claim $1,000 deduction. I would just say whatever approach you ultimately choose, just be consistent with it and make sure you're not double counting anything in that kind of cash flow kind of switch up where it's going from business checking account as payment to credit card. And the more I think about it, the more I'm like, you probably would want to track it on the credit card. Because for example, if you made multiple purchases for your business in a given month, and you're paying off the full balance, it's going to be way more indicative of what those purchases were if you're associating it with the credit card where the actual purchase occurred.
Perfect. Thank you.
Yeah, absolutely. Oh, Tim.
Paul, did you have a second question or?
It was just one. It was one question regarding the tax, the tax penalty, not paying it quarterly. So up until this point, I've paid the taxes just once a year, both the LLC and the W-2. I guess I just don't know what the charge is. Let's say my wife and I, we put our taxes away, so we're putting it away. We'll be able to pay it at the end, whatever that may be. I guess if I'm not paying it throughout the year and I pay it just one time, there's still a penalty. And if there is a penalty, what is that penalty?
Well, it gets a little more complicated. So again, that's there may or may not be an underpayment penalty because there's something called the safe harbor provision, where if through other sources you have covered 90% of your projected tax liability throughout the year, you may not necessarily own an underpayment penalty. But if you fall below that threshold, depending how far below far you fall below that threshold, that's where an underpayment comes into play. It's just it changes. It's based on IRS's, underpayment penalty interest rates. I can tell you right now, unless you owe a really substantial tax balance, the underpayment penalty alone isn't something that's going to be like, oh my goodness, it's really only if you really get into like a 5-figure tax balance owed is where an underpayment penalty becomes a problem. It's kind of just like the icing on the crap cake if you already owe a big tax liability. It's just, oh, and you owe a penalty on top of that. But in and of itself, it's not a huge penalty.
So you recommend just setting it up quarterly and making sure that you're paying those taxes quarterly.
Yeah, I mean, there's quarterly due dates. As long as you get them in before that, you never have
Yeah.
to worry one bit about any underpayment penalties. And the state has underpayment penalties too. It's on both fronts.
Great. Thank you, Zach.
Thanks, Zach.
Absolutely.
Rayleigh had two questions. One, Paul, is actually for you. She asked, when you say that Hurdler is geared towards artists, can you quantify that a little bit?
Sure. I think it hits two demographics, folks that are driving Uber and then folks that are creative artists. So that would be photographer, painters, graphic designers who are working as freelancers, any kind of freelance business. They really have it set up in such a way where it's very user friendly. They have all of the categories itemized. They sync it up with your bank account. The bank account will show you and prompt you exactly when the payment has been, and all you have to do is basically log it in. So for me, I've been using it for 3 years. When I first started, I was starting to learn the info. They made it very user friendly. So I can't recommend it enough.
That's great. Thanks, Paul. Now, Rayleigh's second question is really pertinent, I think, to a lot of people on this call, especially folks that pop in and sell their wares. So she asks that she sells goods. She and her, I'm assuming when she says we, she and her husband, but sell goods at markets in South and North Carolina, and then they've started in Tennessee, and they're looking to keep going into other markets in other states. So she's asking, what's the best process to organize and file taxes in multiple states?
Whew. So we call that process multi-state apportionment, and it can become quite the headache. It's hard for me to speak in blanket statements here because every state has different rules and regulations. But generally, a lot of states have what's called a reciprocity agreement. So ultimately, you file what's called a non-resident return. It really comes down to, generally, again, not advice, just generally, it comes down to where you were physically present when you earn that revenue for your business. If you earn it in a different state, technically, let's say I jumped over the border to South Carolina and I earned half my income for the year there, I would technically have to file what's called a non-resident return with the state of South Carolina. So I'd be filing a North and South Carolina return because I'm a resident of North Carolina. Any taxes I owe to South Carolina, I pay them, and that's a credit towards my North Carolina tax liability. So what that concept I just described is a reciprocity agreement. Not every state has it. So if you're going to do business in different states, you should definitely read up on that. But really just comes down to keeping really good records of where you physically, received that income. If you set up a shop in a different state, you're going to owe tax to that state. And chances are, to prevent you from getting double tax, it'll count as a credit towards your tax liability in your home state.
Thanks, Zach. All right, the last question that I see in the chat comes from Dashia, and she's asking, this goes all the way back to when we were talking about home office stuff, and she was saying, or essentially asking, can you write off your cell phone?
The answer, as with everything in the tax and financial world, is it depends. Technically, what you're supposed to do, so let's say you have, obviously if you have a cell phone and you exclusively use it for business, yeah, that's probably going to be something you can write up on your return. But if you only use a portion of your tax return for your business, technically what you're supposed to do is kind of generally approximate within reason what percent of the time was I using this for personal reasons versus business reasons. So maybe that's 50%. So let's say you feel like 50% of the time you're using your cell phone for business. Your cell phone bill, if you're making payments on a cell phone monthly, you could, in theory, be able to deduct 50% of that cost you incurred for the year. So I think track it if you really want to get pedantic, but I think making a really reasonable approximation there, and if at all possible, in an ideal world, you have a whole separate, device for it. But if you can't, you might be able to deduct a portion of that.
Thanks, Zach. So here's unless there are other questions, we're going to let Zach get on. This has been an incredible hour, but what I want to leave you with is this was a really instructive time, but this is complicated stuff, and it can have short-term and long-term ramifications. So Zach is here, right? He's founded Spainhour Tax Prep LLC. He can help you not only come tax time, but more importantly now. So if you have questions, like I think Rayleigh's example is great. If your business is taking off, but it's getting more complicated, you're taking on new kinds of projects, you're moving into different kinds of areas, you're operating in different markets, you're employing people, or you're using subcontractors, all that kind of stuff. Like, make sure you ask those questions now. You can hire Zach, you can reach out to him, get your ducks in a row now, because once the year is over, then you're already into the next year, the next time. Like, it's not like your taxes you can change anything. You go back in time with a DeLorean on April the 1st, 2025. The decisions you're making today are the ones that are going to affect what happens to you next spring. So please reach out to Zach. We're going to send out all his contact information to you guys after this event. We're going to host this video and this deck so you can look at it. But please do not circumvent him as somebody who can help you get set up as a creative entrepreneur for success. And I'm going to remind you too, another part of that is attending the Reciprocity Circle on June 14th and tapping into the wisdom of the crowd and asking questions that help you and giving answers to people you can help. So Zach, I'm going to turn the end of the meeting over to you to share whatever you'd like, but you have my profound gratitude for taking this time and sharing this information with us.
Yeah. Tim, thanks so much for having me this evening. To all of you that came, thank you so much. I appreciate your time and your attention. It means a lot to me. And like Tim said, I'm not here to be a salesman or anything, but if you seriously want some help, or maybe I can't help you, but I can point you in the right direction, you're more than welcome to reach out. I'll make sure Tim has my website, my email address, and my phone number if you want to just chat with me. I don't charge for initial consultation, so if you just want to kind of see if I might be a good fit for you, if I'm able to help you, you're welcome to schedule a phone call or a Zoom call with me. And again, everything I covered today, it's just the tip of the iceberg. So it's just general guidance, general information. It will depend on your situation.